we're going to average about a 61.8% return year over year until 2030.
It's the kind of return that's attracted record excitement over a brand new investment.
The number one fastest ETF in history.
But many retail investors are still missing out on any kind of crypto-related investment.
He's advising anywhere between 10 and 40% of client exposure to the crypto market.
Bryce Paul with Crypto 101 shares what's behind all of this continued growth with crypto ETFs and the best time for retail investors to get into this market.
Every line of policy being written is positive for crypto.
What you need to know about getting some crypto exposure before it's too late. Bryce, so great to have you on the show talking about a really big market this year, and that's been the crypto market. Everything reached really all-time highs, but now, especially Bitcoin, we're starting to see things pull back. What's going on that's causing this little bit of a pullback in Bitcoin right now?
It's all about your context, right? Like, because the crypto market was pulling back, and then this morning, Jerome Powell came out and at the Jackson Hole sort of symposium kind of suggested that they might be changing a little bit of their policy, and then the market's up 10%. Stocks are at all-time highs. Things change so quickly. So yeah, I think, the market's pulling back because historically in crypto bull markets like we're in right now, there's 7 to 10 pullbacks of 15 to 35% or more on any sort of given bull market. So I think this is just one of those little shakeouts. Crypto is a really, really highly volatile asset, and we're going to see more, but these are buying opportunities. And the long-term trend, as we'll get into, of what's really driving the long-term trend here of crypto, which I'm really excited about, this stuff is just starting. So shakeouts are expected.
I think that volatility that you're talking about is why a lot of retail investors maybe haven't really dipped their toes into crypto yet, because there's just so much volatility. There's so much movement. But I think those who are in crypto every day, like yourself, I know you run the Crypto 101 podcast and are sharing more about the crypto markets and moves every single day on Crypto 101. It's something you've been doing for the past 8 years or so. So you really know there's kind of more of expected patterns of volatility. Can you share a little bit more about crypto cycles and what investors can expect, not only in the crypto markets, but maybe the ripple effects that might come for the rest of the market too?
Cycles are notorious in all markets as they are cyclical. They're driven, whether it's by that 4-year sort of presidential cycle, where every 4 years things really change, and every 2 years there's like new calculus that you have to have with midterms. And so there's a lot of cyclicality. In crypto specifically, we have the halving cycle, and I'm sure a lot of your listeners have heard of the halving, so we don't need to deep dive into it, but it's really what controls the inflation and the supply schedule of new Bitcoin hitting the market. Interestingly enough, about 99.9% of all Bitcoin will be mined by 2030. Then there is going to be about a 100-year race to mine the last Bitcoin, which should be in around 2140. The halving cycle has driven a lot of volatility. Pretty much the year after every halving is when people realize that supply crunch is really here. The supply gets cut in half. The demand gets more excited, and you see that sort of speculative cycle. I think this time is a little different. I know those are very dangerous words in markets, but I really do think this time is different. And I'll kind of go out there and say that in the past 3 halving cycles, we didn't have BlackRock and Fidelity with these ETFs that are buying up boatloads of crypto. We didn't have these digital asset treasury companies buying up hundreds of billions of dollars of crypto. You just have an entire new investor base like pension funds and sovereign wealth funds who have for the past 2 years been underwriting this asset class and have just started their first fresh purchases this year. So these are institutional allocators who don't quickly roll their dice. They slow roll it, and we're starting to see years and years of diligence finally being exercised on the markets. And the volatility, I think, will be suppressed in a sense for Bitcoin because there are so many people selling volatility, like MicroStrategy, for instance. And you can see Bitcoin's volatility kind of at historic, 2-3 year lows currently, even despite this breakout to all-time highs. And so I think that the market will not top in October or November as the 4-year Bitcoin halving cycle suggests. And I think it's going to be a longer, more drawn out cycle because the institutional allocators are here. and they're able to sort of manage that volatility in a much different way than the retail-driven manias of the past have been.
Yeah, lots changing in this market and in all of the markets, as you said. I think this is a really great conversation because all of this volatility you just talked about is why so many retail investors have shied away. But that institutional action that you also just mentioned is why I think retail investors can't ignore crypto anymore. If you're still in that boat of, this is too complicated, I don't want to think about it, I don't want to do that for investments, I think you're missing out on quite a bit because I think this is an area it's not going away and it's
Yeah.
not something you can ignore. Let's talk a little bit more about that institutional side and all of the new areas of and ways that investing firms out there are getting into crypto now.
One of the main things I've been pointing to people to recently, and I should have disclosed this at the very beginning, I am not a financial advisor, and nothing I say is investment or financial advice, and I'm sure you could read disclosures all over this page and everything that MarketBeat does. But I do run a hedge fund, so I do want to disclose that. It's a private fund for qualified investors. But we talk to lots of different fund managers and advisors, and I'm, run the Crypto 101 podcast. So we speak to lots of people. And one of the most impressive folks whose work I've come across is a guy named Rick Edelman. And Rick Edelman, you might have heard of. He is the largest independent registered investment advisor in America, manages somewhere on the order of $200 to $300 billion or advises that client money. So what he says moves market. A lot of people look at what he does, and I'm deferring my answer a little bit to what his answer is currently. And he just came out with this answer about a month or two ago. And he says that he's advising anywhere between 10 and 40% of client exposure to the crypto market in some way, shape, or form. That's a that's a step function difference into what traditional financial advisors had been recommending to Bitcoin over the course of the past 10 years, which was maybe take a small bite of 1%, maybe. Now we've crossed the Rubicon, as they say, and advisors are willing to stick their neck out for crypto. And they're realizing if we don't stick our neck out for crypto now, we're going to look foolish in 5 years' time because every line of policy being written is positive for crypto and every line of policy being removed from regulation is positive for crypto. So we've just got that sweetheart sort of Goldilocks period. The policy front matched with sort of the psyche that's being changed by these registered financial advisors. And we have on the horizon, there was an executive order that was just signed last month, kind of talking about the 401k world, which is about an $8 trillion world. 401ks will now be able to access alternative assets, and alternative assets include, and I'll stop here, is private equity and real estate and crypto. So you could have this huge universe of buying power stepping into a very small market right now. Crypto's $4 trillion. Total assets in the world's like close to a quadrillion. So we're right around 40 basis points of total global value, and we think we're going to be going a lot higher than that.
So much to talk about. I think that is the overwhelm a little bit for new investors who are just getting into crypto, thinking, I don't want to get left behind, but I also just don't get this. This doesn't make sense to me the way that I am used to doing traditional investing and being in the market every day. So let's break this down just a little bit more. I think I want to start with talking about the relationship between the crypto market and the regular stock market that a lot of our viewers are very familiar with. How does the crypto market move with or separate from the current stock market? I know when crypto moves, there are certain stocks or ETFs that are absolutely impacted by some of the moves in crypto. Talk about that connection a little bit.
So there's different market regimes, and so you'll never have correlations that last forever. Sometimes Bitcoin's correlated to stocks. As measured by the S&P 500, or sometimes it's correlated to gold. Bitcoin is really the most liquid sort of saleable asset 24/7, 365, anywhere in the world. And so geopolitical events, when they start to unfold, you kind of see Bitcoin take the brunt of it first. Crypto as a whole is about 40 basis points of the total global market value. So it really does not impose its will yet on the market. The market kind of imposes its will on crypto. And so like when you see the market really get freaked out about, delays and rate cuts and, maybe, the Fed's going to withhold and tighten XYZ. Okay, Bitcoin and crypto is really going to sell off because they're always anticipating new liquidity or, less liquidity. But I think broadly, it does trade currently as a risk on asset. And so what is good for your stock portfolio tends to be good for your crypto portfolio because at the end of the day, a lot of this trade that we're all in is the dollar debasement trade. Your stocks are denominated in dollars. Crypto trades denominated in dollars. And so the dollar is the denominator, that's continually losing value. So your stocks grow and your crypto grows. But what doesn't work in that environment is your bonds, right? Your bonds, which have a fixed income in those dollars, is getting inflated away. And so you really don't want to hold bonds in a highly inflationary environment, which is kind of maybe where we're going to be going down over the course of the next 5 years or so.
When you're talking about all these different impacts with crypto and the regular market, if investors are more comfortable with the market that they know, how can you
Yes.
get exposure to crypto in the current stock market? What are some good ways to do that? And maybe not so good ways to do that. I'm hinting towards talking a little bit about crypto mining stocks. That's been coming up the last few weeks too as an option in the market. We're seeing a lot of volatility in that sector. Would love to hear the different ways you would suggest and those you wouldn't suggest of if you want to stay in the traditional market but get some
Totally.
crypto exposure.
So Bitcoin, I think the best way to get exposure to it is not through owning crypto mining stocks, which I think were pitched back in the day as like levered beta on Bitcoin. It's just not. It just has kind of been shown not to be that great of a business model. The question is how a normal investor who doesn't want to hold a crypto wallet and learn all this new jargon and go sign up for new accounts, how do I get crypto exposure? And the main way would be through the ETFs. Okay, these are pure play exposure to great assets like Bitcoin and Ethereum. These are market leaders. If you want to take the thesis that in 10 years or 5 years or 3 years down the line, crypto is going to be a bigger part of the financial system than it is today or a smaller part, right? If it's going to be a bigger part, Bitcoin and Ethereum are definitely going to be riding that wave higher and getting exposure at today's prices through the Ethereum ETF, through IBIT, which the ticker is ETH, or the Fidelity Ethereum ETF, which is FETH, or for Bitcoin, which is IBIT or FBTC. I mean, these are the two largest ones. They've broken records in terms of their inflows. So these aren't like, oh, I don't know, these might be some sketchy products that this guy's pitching right here. No, the IBIT ETF, ladies and gentlemen, was the number one fastest ETF in history since the ETF market started. The fastest ETF, it was 5 times faster than the VOO to $80 billion in assets under management. Bitcoin hit that AUM level 5 times faster. It's here. You can use these ETFs. So I would start there. I think the SEC is going to be rolling out approvals for many more kinds of ETFs. So if you want to get exposure to Solana or other coins down the risk curve that are going to have higher volatility, those products will be out there. And then, another great company is Bitwise, and they have some interesting fund strategies that you can buy through your Charles Schwab account or whatever. And it's like covered call strategies on Bitcoin that they manage for you, or, momentum rotation strategies between treasury bonds and Bitcoin. So long story short, the products exist. They're out there. They're good. And then we didn't even get into the digital asset treasury companies, which I'll save my conversation there for maybe a later time, or if you have a more specific question on DATs. But that's another new, very risky sort of vehicle that's kind of out there.
Yeah, there's a lot of information here that we could go into, but I think I want to stick to the ETFs and get a little deeper into what investors should know if they're interested enough to want to get some exposure into crypto and they think the ETF route is a good way to go. When is a good entry point? Looking at the crypto cycles, looking at what's been happening with crypto in the last couple of days and weeks, when is a good time to get in on this chart? Or is dollar cost averaging just the best solution if you want some exposure?
So I've got pulled up the IBIT chart. This is the most liquid, largest Bitcoin ETF by BlackRock. So if we take a step back, if you have no exposure or if you are underexposed and you think I have, a 60-40 stock bond portfolio and zero crypto, absolutely start dollar cost averaging yesterday. You can see the market launched here January 11th. That was the first day of trading, and it's been in a pretty solid uptrend ever since. Of course, you're going to have, a few corrections over time, matched by a breakout, correction matched by a breakout. And this year, we've seen, two, minor corrections after the big tariff tantrum. But you can see the market's been kind of stabilizing at all of these volume pointed controls. Definitely don't want to confuse people. All I'm saying here, anchored volume weighted average price from the beginning of the year, you could see a very, very solid support line currently for IBIT right around $50. So you can see the market found some good support at that dynamic volume weighted average price. I don't think the market will come back down to $50 though. I think this is in too strong of a trend. So I would take an anchored volume weighted average price from the tariff tantrum lows, April 7th. And you can see a much more realistic buyback in point where you could actually get a limit order hit. And you could see this was the dynamic support in the June lows. So right around $60 for IBIT is where this correction very well could sort of finish its consolidation. But I'm in sort of the camp that we could have had a very strong breakout here below the 20-day and the 50-day average. We kind of opened and closed below the 50-day once and then broke right back up. So this to me seems like an asset in trend. I just don't think bids are really going to be getting filled that much lower. So people always want to get a better entry price. In a strong bull market, you're just going to have to pay up at the market. And I think that's what we're seeing here for IBIT. Is you're just going to have to pay up in the market and dollar cost average in. And you could see, really, obviously a really good attractive area would be in that sort of $60 per share. And for Ethereum, an even stronger chart, I think, not to get too carried away, but an even stronger chart than Bitcoin's ETF right now is Ethereum's ETF. So, very clearly, up and to the right, breaking out higher, establishing good high volume support zones, high and tight bullish corrections with good high volume breakouts, as you could see here. So all good things in the crypto ETF market, and those are kind of the two main ones I would take a look at.
Yeah, to put it in more terms that investors are used to when they're looking at these traditional stocks, traditional ETFs, when they see the momentum, that's always a good sign.
Yep.
When they see that they're buying at that higher point, I think they're more willing to pay that premium for the stock if they can see that there's an upside future ahead. And do we have any kind of analyst predictions or any kind of even predictions on these stocks to see how much of an upside to expect in the next year for either of these ETFs?
If we look out 12 months, I'm kind of operating from a base case here in the market that we're going to average about a 61.8% return, a compounded annual growth rate for Bitcoin year over year until 2030. And 61.8%, that'll get us at about $1 million per Bitcoin by 2030. I think it's a super realistic target. It's online with what a lot of other folks, I know Brian Armstrong as well, CEO of Coinbase, came out recently with a similar target, and Larry Fink from BlackRock came out and said he very realistically could see a $700,000 price target for Bitcoin as America handles its inflation issues and its debt woes, because you realize that America's the cleanest shirt in the dirty laundry pile. There's a whole host of issues with currencies all around the world. Operating from that sort of base case, that over a 12-month period, we could see another 60% gain in Bitcoin or Ethereum. Today, the Ethereum ETF is at 36.46. We'll put this chart up about 60%. That would put this right around $60 per share. So the Ethereum ETF from $36 to about $60, about a 61% move. The Ethereum US dollar and the Ethereum ETF, they trade 1 for 1. So if the Ethereum ETF goes up 50%, the Ethereum token is going up 50%, right? Because they're indexes, they're 1-to-1 for another. So a 60% move in Ethereum over 12 months, that would put you from where we're at today, $4,800, would put you at right around $8,000 per Ethereum token. So an $8,000 roughly price target in Ethereum would get you right around the share price of Ethereum ETFs at $60.
That's an analysis that I think a lot of our viewers will relate with. They can understand that outlook for the future. A 61% growth rate is absolutely a good upside to look for. So thank you for giving us that price target and explaining it that way. That's great and an easy way for us to understand, I think. The next question that I have for this is, you did such a great job of explaining how to get exposure to crypto through an ETF if you want to stay in the traditional market. But you also are in the crypto market every day, actually talking about buying and trading the coins. And that's another way, if you're watching this and thinking, I'm late on the exposure, how can somebody who's never been in the crypto market really get started? And what do you do to help with that?
I would start by educating yourself, really. And that's why I started the Crypto 101 podcast, is because I'm so passionate about educating people, because there are a lot of pitfalls and nuance to crypto that keeps people out. That I think is always the first and foremost. So, you can check us out, and we have all sorts of different subscription services where people could dive deep to different parts of the market. If you're interested in, DeFi and lending and yield farming, or you're more interested in technical analysis and looking at charts, or fundamental analysis and early coin picks. So we really, we try to service a lot of different parts of the market. And if you are really wanting to go deep, we've got kind of all sorts of different things for you. And I wrote a book on it. And so encourage people to check out Crypto Revolution. But what can people do here and now? I mean, buy Bitcoin. I mean, I can't plead enough. Like, buy Bitcoin, buy Ethereum. Don't complicate it. At the end of the day, crypto is so important. It's almost a human rights issue that people need to own Bitcoin in their portfolio and a little bit of Ethereum as well in their portfolio, because you're making the bet that things are going to be changing and things are going to become more digital, right? And crypto is digitally native assets. The main public blockchains, Bitcoin and Ethereum, are going to just be re-rated so much higher because it's the infrastructure that secures so much value. So you're listening to this before the media and before the hype has really globbed on, right? People are kind of talking about it. So it's like, if you kind of buy before all the hype, you end up, getting a sort of a better rate of return than like buying as all the hype sort of arises. And I just think we're well before a lot of the hype.
Well, very good. Yeah, there's so much to learn. And I think that that's why, if you're in the market, you're a retail investor, maybe you're new to retail investing, or you've been doing this for a long time, and you watch our channel every day, you watch a lot of videos on stocks every day, you do the research. If you want to get into crypto, you want to do that same kind of research for the crypto market. And Crypto 101 podcast is a great way to do that. You can scan the QR code here or click the link. We've got that right in the description of the video for you, so you can get right to Bryce's channel, where he does this kind of training all the time too. It's great to have knowledge. You can never have enough information if you're looking to get into something new. So really great advice and a great conversation today, Bryce. Thanks for your time.
Thank you so much for having me, Bridget, and I look forward to speaking to you again soon.
Yes, sounds great. And thank you for watching, everyone. Let me know your thoughts. Are you into crypto? Is this all old news for you? Have you already checked out the ETFs? Or have you been hesitant about getting into this kind of investing? What's holding you back? What are your thoughts? Did you learn anything new here today? I'd love to hear from you in the comments. Thanks again for watching, everyone. And as always, happy investing.